Do you think life is simpler as time evolves? For some, it can be more complicated when facing issues about health, estate plans, probate, long-term care, and more. That's why Attorney-CPA Joe Cordell hosts ElderTalk with TuckerAllen, providing intelligent answers for those thinking about their future. Here's Attorney-CPA Joe Cordell.
Welcome to another episode of ElderTalk. Today, we're going to talk about a couple things. One is we want to talk about the subject of long-term care and life settlements. Now, I bet many of you don't have any idea what that phrase means, but I think you will find it very interesting and for many of you, directly applicable. It could be the solution to your long-term care problems. The other topic we want to talk about is identity theft. If there's anything that we've been hearing more and more from you, our listeners, over the last 2 or 3 years, it's concerns about safety, concerns about exploitation, fraud, etc. So it behooves us to periodically circle around and talk about this issue. I think we've dealt with it, Jill, haven't we, a couple times in the past?
Yes, we have.
So we want to be sure that we focus on your physical safety as much as your health and your financial needs. And incidentally, I guess when we're talking about identity theft, it's more than physical safety. It includes your financial, your entire financial picture. Virtually everything in this digital world is at risk when you're at risk for fraud. Jill, why don't you introduce our guest?
Yes, I am so happy to have this guest, so excited. Chris Orestis, president of LifeCare Xchange, and he's known as the retirement genius. Chris, thank you for joining the Elder Talk show today.
Oh, no, thank you. It's really great to be here and to cover these topics.
No pressure on being the retirement genius, but we do expect you to have the answers to every question.
Well, I do sort of look like the professor on Gilligan's Island.
Oh, okay.
Well, better that than the skipper. I'm not picking on the skipper.
Or Gilligan.
Yes. So, Chris, let's start by talking about this idea of a life settlement as a solution to long-term care expense.
And you credited that. You're, with pioneering long-term care life settlement. This was over a decade ago, correct?
That's right. Yes, I am the person who brought that concept into the financial marketplace, marrying the idea of a life settlement, which is the sale of a life insurance policy by its original owner to a new buyer. And what's interesting about life insurance policies, and so few people realize, is that life insurance policies are actually assets. And when you own a life insurance policy, it's personal property, just like your home. And just like you make mortgage payments for years on a home, you make premium payments for years on a life insurance policy. The big difference is so many people will abandon their life insurance policy after years of making premium payments without realizing it's an asset they could sell. Now, you would never do that with your home. You're always going to sell that asset for its market value, yet too few people realize they can do that with a life insurance policy. So we looked at that and we said, you know what? We need to get the word out. We need to work with seniors. We need to work with senior living communities, home care companies, elder law attorneys, and put together the idea that a long-term care life settlement could be accessed by seniors to get the most money out of their life insurance policy, to create tax-free funds they could use to pay for any form of senior care, long-term care they want.
So when you use the term settlement, you're referring both to the sale to a third party as well as presumably the sale back to the insurance company as well. Are both of those common techniques, or are you just talking about sell to a third party?
It's sell to a third party. If you were going to, quote unquote, sell a policy back to the insurance company, that's called surrendering the policy. That's cash surrender value in a policy, if it even has any. Term life policies don't have any cash surrender value. Many people will drain their cash surrender value, letting it cover their premium payments. And then one day, particularly as they become seniors, wake up and all of a sudden they're getting premium notices and they haven't seen these premium notices for years. And they go, well, how the heck am I going to pay X thousands of dollars to cover this policy over the next month or quarter or year? and they'll just abandon those policies.
But Chris, what doesn't make sense to me though is that if there is let's assume we're just talking about temporary policies or term policies. So it's true, there's no cash value, so there's no quote unquote surrender as we normally use the phrase. However, if there is a value which a third party is willing to pay, why would we exclude the insurance company from participating in that auction or in that transaction? Because if it's valuable to a third party, then it should be potentially even more valuable to an insurance company who, it's true, under contract, they have no obligation to pay you a nickel. But let's face it, they're going to have to write that check sooner or later if you keep it in effect. And apparently a third party believes that they have the ability to keep it in effect. And so do you ever have the insurance companies participate in that with a temporary policy?
No. Insurance companies stay away from what's known as a secondary market sale of a life insurance policy.
Why is that?
Well, there's two reasons. One, they want to focus on selling life insurance policies. They don't want to be distracted by getting into the business of all of a sudden buying back life insurance policies. They're focused on selling life insurance policies, collecting premiums, and then for those policies that stay in force to the end, paying out death benefits. Now, I'm going to tell you something, and here's sort of the ugly little secret about the insurance business. But life insurance companies really don't want people to even know that this option exists. They would prefer that a senior pay premiums for years and then one day give up the policy.
Yeah.
They would rather see policies lapse or surrender than to stay in force because they were bought by someone else who's now going to take over the premium payments. Because remember, when the new buyer buys the life insurance policy, and let's just say for round numbers, you one of your listeners had a $100,000 life insurance policy, they wanted to settle it, and based on the underwriting, the cost of the policy, their age, their health, their gender, they received $30,000 or $40,000 for a settlement. Okay. Now, the new owner of the policy pays out that money and then takes over the premium payments and will pay those premium payments until that person who's insured on the policy passes away years in the future. They then will collect that $100,000 death benefit as a return on their investment. Now, the buyers of life insurance policies are not individuals. These are financial institutions. These are major hedge funds, major investment banks that look at insurance policies as another asset class, just like they look at buying homes and buying up mortgages as another asset.
That's what I was going to ask you. Who would this third party be, and how would someone go about finding this type of a third party?
Well, awareness of life settlements has grown considerably from where it began, call it about 30 years ago, to where we are today. Now, there's TV commercials, there's radio ads, there's a lot of information online, there's seminars, agents, financial advisors, elder law attorneys, long-term care companies like assisted living and home care and nursing homes. They're all talking to people about life settlements as another financial option. It's a well-regulated, mainstream financial option in this country now. Kind of, for some people to say, oh, it's kind of like a reverse mortgage on a life insurance policy. It's a simple way of thinking of it, but in the difference,
it's different.
With a reverse mortgage, you're taking out a loan. With a life settlement, you're actually selling off the asset and getting your money that the value of that asset.
And do you have to have that life insurance policy for a certain period of time before you can do this?
Yeah, the minimum time that a policy would need to be enforced is 2 years. There's a 2-year contestability period that life insurance companies can challenge a death benefit and not pay it. And so typically to have a life insurance policy be saleable in the secondary market through a life settlement, it would need to have been enforced 2 years or more.
That's interesting. And you know how you have regulations that govern the demographic factors that insurance companies are allowed to consider in pricing a policy, like age, gender, some other things, and certain things are precluded, such as race, et cetera, genetic information. But I'm thinking about this from the investor side of the table. But it's interesting now that that there are a lot of things we know in addition to those basic pieces of information that I assume there's no regulations limiting what a third-party buyer can pay and the reasons they pay it. And so you can incorporate information like family longevity history, et cetera, and there'd be ways to much better predict what the longevity of a person is going to be, including their health, before not just a physical, but incorporating all things related to their physical information, their medical information. So it's just an interesting industry.
Yeah, it is, and that's correct. And here's the really fascinating thing about the life settlement and why it works so well for long-term care in particular. It is the only financial transaction that financially rewards people the older and sicker they become.
Right.
Mm-hmm.
Okay? We call it reverse underwriting. When you're young and healthy, you want to be buying insurance because the younger and healthier you are, the cheaper it's going to be, the more you can get.
That's a very good point. And I hope our listeners are getting what you just said, how if the time that you need to go into long-term care when you're having problems, as Chris just said, that's when you can get the most from your closer to face value, right?
That's right. That's right. The older you are, the sicker you are, the more you need care. And believe me, we've worked with families where their loved one is in a facility or getting home care. Their things are getting tight on money. They don't know what they're going to do. And then all of a sudden they realize, well, wait a minute, what about this life insurance policy? And it's it costs nothing to have the policy analyzed. There's no obligations to find out if you would qualify, what you might get for the settlement. And then the process from start to finish takes between 60 and 90 days. The policy is sold off. You're getting somewhere between 20 and 60% of the death benefit in a lump sum cash payment that can be tax-free depending on how much you've paid in premiums to the policy and or what your health is and what your care needs are for long-term care.
Chris, does the policy have to be worth a certain amount to participate in this type of transaction?
Oh, great question. Yes. Really, the minimum death benefit size is $100,000. $100,000 and above really is the minimum for being able to qualify for a life settlement. And any kind of life insurance will work. Term life, universal life, whole life, anything will work.
But why is that? It looks like, a $50,000 policy is a pretty large chunk of change.
It's just the economics that are involved in the transaction. There are costs that are bared by the buyer of the policy. There's underwriting. There's fees that they are absorbing as part of the transaction, and it's in essence it wouldn't be any difference in what it costs them to do a $50,000 policy and a $5 million policy. So from an economic perspective for the buyer, there's sort of a threshold where. Now, let me be clear, it's still possible for a settlement to be done for a smaller policy. It's possible for a settlement to be done for somebody who's younger in age, but their health condition is so severe that you can clearly see, let's say they have ALS or stage 3 cancer, and it's clear that their life expectancy is going to be pretty short, but they're in their 40s. They could still qualify for a settlement, but as a standard measure, it's going to be people in their mid-70s to mid-90s with policies that are $100,000 or greater who are most likely to qualify for life settlements. But let me tell you, last year in this country, there was $4.5 billion of life settlement payouts that were done in this country.
Which on the one hand, it sounds like a lot of money, but it also tells me, Chris, that there are a whole lot of policies where people aren't doing this. And it could be they're not doing it for important strategic reasons. Their estate plan, maybe for taxes, they want the money. So there are reasons that people wouldn't do this, granted. But I suspect even though $4+ billion is a lot of money, I still think that there's a lot of money left on the table where it would have been advantageous to both the insured and an investor to have done a deal, and there just wasn't adequate information. And let me say this too, as somebody who, since I'm an elder lawyer and would be more sensitive to these things than most, as I watch these ads, You do see ads on settlements, but they're referring it. At least they make it sound like they're referring to settlements from a personal injury suit or something like that. I'm missing these ads. I know they're out there.
I haven't seen them.
Well, but
Yeah.
Chris, I don't doubt that they're out there, but I'm telling you, we haven't seen them here. They're not saying insurance settlements. They're not explaining or suggesting what you're suggesting in these ads, because I think more people would be aware of it. I'm willing to bet that 99% of the people listening right now have never heard of this concept.
I would think that you're right. And let's just be clear, what you're referring to when you talk about a settlement for like a lawsuit, that's a structured settlement.
Mm-hmm.
Right.
And that is different than a life settlement is specific to a life insurance policy. A structured settlement is cashing people out of annuities, lawsuits, and lottery winnings.
Yeah.
So
and those get there are ads for that.
Yeah,
And
constantly. Yeah, I would say for every life settlement ad, there's probably 10 or 20 structured settlement ads that are in heavy rotation. But you're also right about the amount of policies out there. $4.5 billion of transactions in a market where on an annual basis, there's $200 billion of death benefit owned by seniors every year that could potentially qualify to use a life settlement, not only for their long-term care needs, but also for just funding retirement or anything else they want. Because if they sell off the policy, that money is theirs. There's no restriction in its use. They can do with it as they please. But for some people, they want to have an organized way to use it for their long-term care expenses and maximize the potential tax advantages that go with it.
so this is not a heavily regulated industry like, for example, reverse mortgages.
No, it is. No, this is a very well-regulated market. This industry is regulated 45 out of 50 states. Have life settlement regulations that are regulated by the insurance departments and insurance commissioners in each state. So over the last 10 to 15 years, the life settlement marketplace has become very well standardized and regulated across the country. And now there's actually a bill pending in Congress that we actually helped draft and we are supporting based on the concept we created with the long-term care life settlement. In Congress, there's a bill that was introduced at the beginning of the year to create a long-term care health savings account that would be funded exclusively by a life settlement. And if somebody did a settlement, put their money into this account, it would then be all tax-free dollars as long as it stayed in the account and was used for care for themselves or a loved one.
If you're just joining us, our guest today is Chris Orestis, president of LifeCare Xchange and the retirement genius he's known as. We're going to transition right now and talk about protecting seniors from identity theft. Chris, would you say seniors are the most vulnerable group when it comes to identity theft?
No question. Seniors are targeted consistently by cyber scammers, by phone scammers, every form of identity theft, financial scam that can be perpetrated remotely through any of those mediums to contact somebody in their home. Seniors are the prime target. And I'm going to tell you something else. Their targeting and the amount of scams that are going on has increased significantly this year in concert with the coronavirus pandemic.
Why is that?
Well, seniors being so vulnerable and susceptible, are the scammers now are using tricks around coronavirus, sending people emails, making phone calls to tell them that they're eligible for stimulus money, that they can find out more information about testing, about people who have tested positive in their area. They're using tricks around coronavirus, which they know will particularly work well on seniors who happen to be very open, trusting, and available because they're home to take calls, respond to emails. But at the end of the day, what these scammers are trying to do is to get people to give up either by talking to them over the phone or through giving them access to their computers by clicking on links from emails and things like that, access to get their social security number, their bank information, their credit card information. Those are the three holy grail items that the scammers are looking for, and they know seniors are particularly vulnerable to give that up.
So I want to talk about each of those three, what you call, the Holy Grail of
For the
scamming?
scammers, yeah.
I can see where during a time like this, for reasons that you stated relating to COVID-19, that the elderly are especially vulnerable because they're a little more frantic. For them, this is life or death. So they're in unfamiliar territory. So their capability of dealing with newness is a little more challenged by virtue of their age, generally. But throw in the fact that they're the ones for whom it's most a life or death matter, far more than anybody below 60. And I think that, there is a willingness to reach out for lifelines or what are perceived lifelines. And it really is exploiting a desperate person in many ways. Is desperation too strong a word for the elderly on the subject of COVID-19?
No, because they're so vulnerable from a health perspective and a financial perspective that they are desperate. And for many, they have been locked up in their homes and some have still not left since things started, call it back in March.
I know this in the family. It really is amazing. And so when you think about these three components that you mentioned, let's talk about each. So let's talk first about, what does a Social Security number give someone who has ill intent? What advantage does that give them? How can they use that?
It is the key to unlock so many of your doors. It allows somebody to pose as your identity. That is the key to identity theft. And if somebody can steal your identity, they can open up new credit cards. They can go after some of your existing accounts if they can find that information. Using somebody's Social Security number, they could create new passports. They can file for all kinds of documents that once they have your Social Security number, they're able to pose as you. And that is the primary form of unique personal identification in this country.
What was the company that protects you from identity theft?
LifeLock.
LifeLock. And do you remember that incident several years back where I think it was the CEO wanted to convince people that he had total confidence in his system, and he gave his Social Security number in the ad? Do you remember that?
Yes.
He actually gave his Social Security number in the ad.
You're asking for it.
I know. That was a challenge to every, geek, every kid sitting in his bedroom with a computer to put egg on this guy's face, which they did. And he later admitted that, there were some things that could have happened, but now we've figured out how to fix that. But yeah, Social Security number is a dangerous thing to hand out.
Well, it is. You've got to protect that at all costs. You've got to be so reluctant to give that out, particularly over the phone or through an email. Now, let me also just touch on the companies like LifeLock that provide those services. Remember, they cannot guarantee you that your identity or your financial information won't be stolen. What they're really doing is they're providing you with a tracking service and sort of an insurance policy that says if you are hacked, we will help you clean up the hack. We will help you with your credit score, and even possibly based on the package you buy, financially insure you for some of your losses. But it is not a guarantee that you are foolproof.
Right.
Because there's always, if there's a will, there's a way.
That's right.
There's all types of different scams. In fact, last night I was reading this article that came out of Dayton, Ohio. This woman was convicted of stealing this elderly gentleman's identity. And what she did, she contacted his pension agency, pretended to be a relative. She had another person get on the phone and pretend to be this gentleman and basically transferred his pension into her account. That
is a common technique. I can't get over how often that happens even in my life, where my assistant will be taking care of something and she'll phone and three-way me in, and they will trust that it is me, which of course it is. But But I'm wondering, as I'm saying, they'll say, "Is this Mr. Cordell?" And I'll say, "Yes, it is." And are you authorizing us to do such and such transaction? And to which I'll say yes. And I hang up the phone thinking, now how did they know that that was me? It's surprising how vulnerable some of these systems are.
Yes.
Yeah, and it's true. They really are. And the same can be said with trying to get to your bank information.
Yeah, let's talk about bank information next, the second
Yeah.
leg of the stool.
Scammers, either by phone or by email, will offer different enticements to try and get you to give up your bank information voluntarily to them, telling you you've won a prize, telling you you've got money that needs to be transferred, telling you there's been a hack of your account and they need to confirm your information, and all of a sudden you're reading off your bank information to them. Any bank or anybody that will call you asking you questions about your bank information knows your bank information. If they don't, that means they're trying to scam you. Because once they get their hands on your bank account information, they can start helping themselves to your money in your account.
So this is a vulnerability where, through some way, the victim is actually voluntarily handing over that information, albeit under the guise of some other purpose, but still, that's where you're voluntarily giving a third party, by phone, in person, by email, you're voluntarily disclosing that number.
That's right. There's a number of ways to voluntarily disclose it inadvertently, giving it out over the phone, throwing away your bank statements, throwing away bank receipts, and not properly disposing them. Criminals will dig through people's trash looking for that, because once they get their hands on that, they've got all they need.
Well, if you think about it, isn't that in everybody's trash? How many of us have a shredder at home that we use? I mean, I have a shredder, but we certainly don't religiously use it, and I think we're exceptional that we even own one.
You know what I do is I stockpile anything like that, anything that's financial statements, anything that has that kind of information. I keep it in a box, and then I will, when I go to a place like Staples, for example, they have a secure disposal service where you can put it in, and then it goes to a secure like incinerator that incinerates that kind of information. You do not want to just be throwing it out in the trash. The other vulnerability to get into your bank or even your credit card information is through your computer. And there's a lot of scams out there that are phishing through emails,
right,
to get people to click onto links that as soon as you do, they're inside your computer and they are grabbing all of your information before you even knew what happened.
And so even though you're thinking that a link is possibly harmless, or the link appears to be authentic, it appears to be from a recognized third party, perhaps an institution that you do business with, and so you think when you click that you're going inside that institution, when in fact you're allowing this bug to get into your system.
That's right. That's right. If you get an email that doesn't seem to make sense, even if it looks like it's from your bank and it's telling you click here to retrieve something, to verify something, don't do it. At this point, any email that's sent to you that you didn't specifically request and you know it's coming to you, do not click on a link without verifying first that that's the real deal. If you get something from a bank, your bank or your credit card company telling you to click, call first. Don't just click.
Chris, how can children of seniors help protect them against identity theft? What would you recommend?
That's a tough one, because sometimes with identity theft, or with just financial scams in general, the senior is befriended and kind of seduced into a relationship with the perpetrator, and they will keep it secret. We have seen this happen where seniors will willingly fork over thousands, tens of thousands of dollars to a complete stranger who has woven a tale to create a relationship and then start asking for help, maybe trying to insinuate some kind of a romantic possibility, or needing their help or protection with something. So really what kids, the adult children, need to do is sort of keep an eye on the patterns of what's going on with their adult parents.
Mm-hmm.
The problem is that when they're scammed, so often they're ashamed and embarrassed and won't admit it. They'll hide it. So
Yes.
it's really
They won't
tough.
tell anybody.
Right. It's really tough to catch it. And when you do, oftentimes they'll resist and fight against it and not be willing to admit that it's a scam. That's a real tough one. That family dynamic, all I can say is you've got to try and keep an eye on things, keep an open line of communication. If you have some visibility into their finances, into what's going on with them from that perspective, you might see irregularities and you might be able to catch it and try and stop it before it gets out of control. And obviously for either the person who is the owner of the bank account or the credit card, or potentially family members who could keep an eye on it, it's important that you're monitoring that activity on a regular basis. Monitor your bank and credit card activity, your charges on a weekly basis, to try and catch something before it gets out of control. Stop it before it gets out of control. If you get an alert from your bank or your credit card of suspicious activity, again, don't click on a link to anything, but call and find out if it's real and what's going on.
Good advice. If you're just tuning in, our guest today is Chris Orestis. He is known as the retirement genius. Chris, I want to move on to another aspect of identity theft, the one involving the IRS when you get that call.
Right. You know, the IRS, that's been a long-running scam, whether it's a phone call or a text message, and again, maybe even an email, posing as the IRS, threatening legal action, telling you need to respond immediately, or literally they're sending the police to your house. They're going to use scare tactics, intimidation tactics, and guess what? The IRS doesn't do any of that.
Of course not.
No.
This is completely fabricated. It's intended to scare you so that you'll respond either by clicking on a link or calling them back. And then what are they doing? They're going to ask to verify your identity. Give us your social security number.
And I can see an elderly person with a diminished mental capacity really falling for that.
Right.
Yeah. And
another scam, there's two scams, right? It's either fear or greed. They're either going to try and scare you, or they're going to try and entice you by telling you you've got a refund. You're entitled to coronavirus stimulus money. Call now. And then again, well, give us your bank information, give us your social security number so we can verify who you are and transfer your money to you. And then you've given up the ghost.
So let's talk about that third leg, which I think related to credit cards. So that situation often involves, I imagine, somebody who believes themselves to be purchasing something. Perhaps they've gone online, maybe they got a pop-up ad, and it sent them somewhere where they're engaged in a purchase, and naturally they think, well, of course I need to give my credit card information because I'm purchasing this item. And with time on their hands, there is a tendency for all of us, all ages, my daughters included, to, when they're sitting at home or whatnot, they go online, and sometimes you shop online. Isn't there a lot of opportunity for seniors who think they're simply shopping to be ending up disclosing their credit card information? And you wonder, how do you really safely prevent that? Are things like PayPal a good barrier to help protect you from that third party fraudster?
But PayPal can be a possible wall of protection. But the big thing is if you make a charge with your credit card that then looks like you've been had, somehow you've been scammed. Credit cards, quite frankly, of the three ways that you can be hacked: giving up your social security number, letting somebody into your bank account, letting somebody get your credit card information, that's the one that's easiest to address, because you can immediately contact your credit card company, shut that card down, report the fraudulent activity. If you catch it relatively quickly in the cycle, chances are good they'll just refund you that money. But that's, again, you've got to monitor your card activity. So if you buy something and it doesn't show up and all of a sudden you're seeing charges appear on your credit card, you've got to contact your credit card company and report that this happened so they can shut that card down and they can reverse those charges. That, and the other thing you want to watch out for when it comes to credit cards is not just using it for shopping, but it's sharing it with other people, particularly if you've got children in the house, grandchildren in the house that are sharing your streaming services, or using your credit card to pay for gaming platforms like Xbox and things like that.
I wonder how common that is.
Right. It's all over the place. Because you sign up for Amazon or Netflix with your credit card, and then you let 5 people, you can have a certain number of family accounts, so everybody's sharing it. Or you give up your credit card when the kids say, oh, can I buy something online with a game or something like that? And all of a sudden your credit card number starts to spread and get out of control. So the more you can keep that at bay, maybe have a separate credit card for those kinds of charges and expenses, so that if something ever went wrong there, you could quickly pull the plug and it wouldn't upend your entire financial world. Those are things to be thinking about.
And one thing that I think is worth mentioning is that what you said, of course, is people should know that there are some advantages to credit cards, and one is that they haven't actually paid out the money in all probability yet, and there's some substantial period of time to do something. But most of the credit card agreements ask you within a certain number of days to respond if you have suspicions, and they expect you to be reasonably diligent. So those among our listeners who never look at their credit card invoices, and I suspect there's a significant percentage. In other words, they just assume it's correct.
Right.
And they look at the total amount that's due, of course, and they will pay that. But I'm willing to bet, maybe I'm cynical, but I'm thinking maybe 50% of the people out there do not go through and look at item by item on their statements. And if somebody is negligent in that way, I don't know what the precise outcome is given the contracts and the consumer protection laws. But I would say that that credit card insurers, they have the right to expect you to be reasonably diligent in identifying these things, and they may not have to reimburse you if this goes on for months and you make no effort to identify it. Is that true, Chris?
That is true, and that's why it's so important to be checking not just your print statements, but anybody with a credit card can set up an online account and go online and look at your card activity on a daily basis. And I mean, I look at mine more than once a week. I look at my bank accounts. I look at my credit cards and activity in all of them multiple times a week, just to keep an eye on things. And I have caught a couple of times charges that didn't make sense. And also, when my card company has reached out to me to tell me they think they saw something fraudulent, it takes 2 seconds to quickly confirm whether that was a charge you made or authorized or not. And I've had plenty of charges where I've said, yes, that's one of mine. And I've had a couple where I said, you know what, I don't recognize that. Great. Shut it down, freeze the account, and they go to work.
Yeah. And you probably get a new card in a few days.
Yeah, and when I buy anything online, I do not use my checking account, my debit card. I always use the credit card because, as you were saying earlier, it's easier to rectify that type of situation with a credit card company.
Yeah, with the debit, it's a wire transfer, and it's pretty instantaneous. So, Chris, it sounds like there would be a lot of temptation for people to just throw up their hands and say, I'm going to go low tech. And I do know some older people who are in fact doing this. They've decided that everything that we've just said here is so fraught with risk and so many opportunities for things to go wrong. And they're asked to be so vigilant that they would rather just step back from this modern digital world and say, look, I'm going to deal in cash to the extent I can. Maybe I'll have my checking account, of course, maybe a credit card. But the point is they're not going to participate in the digital world unless they have to. And I've been a little critical of that among those I know, saying you're missing out on so much. But as we go through this conversation, I'm thinking, well, maybe there's a certain wisdom to that decision.
Well, it is difficult to participate in today's society off the grid.
Yeah.
But it can be done. It's interesting that cash is becoming less and less common in transactions. Where were we? Literally a week ago, we took the kids to an ice cream place and they wouldn't accept cash. They would only accept cards because of the fear of COVID.
I've heard that.
Yeah.
Several businesses are doing that.
So it's hard, dealing in nothing but cash would be difficult. You would work hard at it. And guess what? If you put in less effort to just be smart about protecting your identity, your social security number, protecting your bank account numbers, and protecting your credit card, monitoring the activity, not giving that stuff out, being hyper aware of suspicious looking emails, asking you to click on something, phone calls coming in, asking you to give up your information to verify something or to claim money or a prize. You are in much better shape to protect your identity than to try and shift to a entirely off the grid, I won't participate in the electronic world lifestyle.
Yeah.
Chris, there's another aspect to identity theft, and that involves stolen medical information. How does that happen?
People, a lot of, particularly for seniors, are seeing not just a primary care physician, but specialists. And they will be transferring medical records back and forth, usually electronically. The medical infrastructure of this country has increased its use of electronic medical records very much. And for seniors, as they're getting older, they will actually start to request their medical records for a variety of reasons to get their hands on their own medical records. Sometimes they'll access it through an electronic portal. Sometimes they'll get them hard copy. And you've got to be very careful with those records. If you're going to actually possess your own medical records, whether it's through an electronic portal or actually physically having your medical records, and there are many seniors who do, you've got to protect that information. You can't get the hard copy information for some specific use and then not need it anymore, and then again, toss it out. If you're going to dispose of it, either bring it back to the doctor's office or do it or shred it or make sure it's being disposed of through a secure disposal outlet.
So is that information, though, being used primarily for insurance fraud?
Yes. They'll use it for insurance fraud. They'll use it for Medicare fraud, Medicaid fraud. If they get their hands on your medical records, they'll probably have their hands then on your social security number too. They can now start posing as you to file claims, to register themselves, to collect your benefits. So you've really got to watch out for that.
Yeah, it would have your insurance numbers.
That's right.
On those forms, most do.
Right. False claims, insurance fraud, absolutely.
And again, there is, we need to circle back and remind people that it's true that if you're a victim of somebody doing this to you and it was no fault of yours, through a lot of effort and hassle, I might add, still, there's reasonably good hope that you can get it straightened out if you have clean hands. But if you don't have clean hands, where you've been derelict and it's come to your attention and you could have and should have noticed it, and meanwhile you have a third-party provider who's victimized, maybe tens of thousands of dollars, I would just think that they would have potentially some cause of action. The bottom line is you have a duty to be diligent and be responsible to monitor notices and things that come to you that might serve as a red flag, that should serve as a red flag that something's going on.
That's absolutely correct. You couldn't say it better.
So as we wrap up, Chris, I'd like to make clear that we want to come back and talk further about this. today, I mean, this discussion was important. The discussion about these life settlement opportunities for people to provide for long-term care, also the risk that seniors have, especially regarding fraud and identity theft. But there are other topics we wanted to talk about relating to long-term care. So if we can, let's schedule another appearance if you're available over the next month or so, and we can pick up one of those conversations.
I'd be happy to. We could talk about, what are the differences between assisted living, nursing home, home care.
Those are meaty topics. I'm telling you, that's the center of the target, I think, for concerns that many of our listeners have. So with that, we're out of time. We'll come back. We'll have Chris Orestis with us again. Time has flown. This has been another episode of Elder Talk. Till next time, take care.
You've been listening to Elder Talk with TuckerAllen, providing intelligent answers for those thinking about their future, with Attorney-CPA Joe Cordell. Sponsored by TuckerAllen, your estate and elder law advisors. For more information, visit TuckerAllen.com. Listen again next Saturday for another edition of Elder Talk with TuckerAllen. The choice of a lawyer is an important decision and should not be based solely on advertisements.